we've got a challenge, a bit of a challenge in the marketplace with various distributed finance companies. And the problem with the distributed finance companies is that as their assets began to decline, they also had loans that they needed to pay money on. So the crypto lender, they talk about that, was one of the distributed finance applications. So Vault froze the withdrawals, and hedge fund Three Arrows Capital also filed for bankruptcy. Now, the challenge here is that, okay, when a company starts out, they have to have real money to pay people's wages. So they go out on the market and they get real money. They get real money in the amount of loans that they need in order to proceed to build their distributed finance application, all of the coding that goes around with it, get the blockchain set up and get the smart contracts all set up, all of that stuff. So there's a whole bunch of startup costs before they even do the first bit of business. So what happened was that a lot of these companies went to each other, and Three Arrows Capital has been around for almost 2 decades, about 1 decade from about 2012 as a blockchain company, and heavily invested in Bitcoin and other currencies. They had a lot of their assets in coins. They had a lot of their loans in dollars. So they actually owed people money on real loans that they needed to pay for in dollars. So part of the challenge as they went on down here is Three Arrows Capital files for bankruptcy. Now they filed for bankruptcy in Great Britain because in Great Britain is where they had their main headquarters, okay? Then they came back to New York and filed Chapter 15 bankruptcy in New York. Now, Chapter 15 bankruptcy is just a bankruptcy that'll alerts the court that they have a foreign company with U.S. assets that need to be considered in a bankruptcy. And so they liquidated in the British Virgin Islands and filed Chapter 15 here. Now, note this thing right down here. They defaulted on a $667 million loan to Voyager Digital. Okay. That had to hurt, okay? Voyager Digital, of course, is expecting their money to be paid back on regular increments. And, of course, that was defaulted on. So what you're seeing here is a domino effect. Three Arrows Capital files for bankruptcy. It defaults not just on this loan to Voyager Digital, although it's the largest. They end up starting a domino effect of a lot of others following. The collapse of Three Arrows Capital has triggered the downfall of many other companies across the crypto space, particularly lenders who the hedge fund borrowed from in enormous sums. So here you've got a hedge fund that usually takes money from users. And what was happening is they were taking coin from users and having it invested and so they could get a return. And of course, all the fees that they charged for those transactions, those fees then paid for their loans. Okay? Just a normal bit of doing business. If you were a hedge fund just in dollar-denominated amounts, the hedge fund might be invested in stocks, might be invested just in mutual funds or in money markets. Who knows exactly what? Well, Three Arrows Capital was heavily invested in coin, in Bitcoin, in Ethereum, and various other altcoins. So what you had happen was as the markets began to tumble, and we saw the huge amount of decline. In fact, the decline in the Bitcoin market alone has been twice as severe. It's been well over 40%. And the stock market has gone down by 20%, just to give you an idea. So the decline in the crypto market has been huge. With that decline, they had no ability to allow people to withdraw. And after a while, they stopped letting people withdraw because they were withdrawing all of their funds. And because they were withdrawing all of their funds, they also could not pay their loans. So Three Arrows Capital goes that way. Vald was the headline of this. They froze assets. Voyager Digital. So Voyager Digital was another victim. And Voyager now, this last Tuesday, just yesterday, filed bankruptcy in New York, Chapter 11 bankruptcy protection in New York because it couldn't pay. It now holds $685 billion in crypto assets compared to the $1.12 billion that it has loaned out. So it's upside down. You're supposed to have more assets to cover your liabilities when you're in this kind of business. So they have, they're looking to try to get loans. They cut withdrawal limits, and eventually they suspended their ability to withdraw. Another company, Deribit, went to court to file bankruptcy on a loan of $80 million that they had owed to them from Three Arrows. Bancor also, and Coinplex. And then we get down to the crypto lenders that specialize just in lending crypto. We've got the Celsius Network, which I just saw an article that they have, citing extreme market conditions. They, after this article, filed bankruptcy as well. Babel, employees have quit because they've been freezing accounts and can't maintain business. BlockFi is trying to get people to buy them up so that they can, survive as a company but be bought by somebody who has more assets. And Genesis is another, thanks to its exposure to Three Arrows Capital. So all of these companies are in this domino effect. And frankly, there's probably going to be a whole lot less. Now, understandably, let me see if I can get the Three Arrows Capital. This is their website. And frankly, I'd have a hard time investing in their website or in their company based on a one-liner about us. The news stopped being posted in March of 2021. They stopped posting news. So they might have had problems clear back then, but didn't really say anything. If you want to select your investments now, these links are just pointing you to other places. If I click on Avalanche, for example, it'll go to the Avalanche website. See that there are a lot of other DeFi companies out there. And notice I haven't mentioned any of these. All of these seem to be stable for the moment, but we'll see if they survive the crypto downturn. Okay. All right, so let's close this one. And, this is kind of an idea, when I go to a company where I want to invest my money, here's Fidelity. Of course, they've been around a long time, but you go to their page and you get some information. You don't get just a one-liner about us that, oh, we're a capital fund. We get information about the Dow, and we could look at the NASDAQ and all of those. We get information from news sources. We come down here and we can learn about the company. We've got questions. We've got an 800 number to call. Definitely much more robust than what Three Arrows Capital was. And, just to illustrate that maybe these companies were not as mature as they needed to be, and now they've taken a 40% hit in the value of their assets, and having their assets hit so hard caused their downfall. So hopefully that has helped you understand what the DeFi market is and what's happening in the DeFi market. So let's go ahead. Celsius is also another casualty. Celsius has suspended withdrawals, and I saw an article a little bit earlier that they have also filed for bankruptcy. Okay, so we'll close that one. And here's some more news here. Coinbase laid off 18% of its workforce. And of course, the COO says it's intended to be a one-time event. I've heard that before. Boeing at times goes through layoffs as well. And, you know, Boeing always intends it to be a one-time thing. And went through a period of time where Boeing laid off a one-time, and then a year later another one-time, and then a year later another one-time. And so, you know, nothing seems to ever be stable when you're in a financial crisis like we are out there in the world today. So that kind of gives you an idea what's happening in the crypto world, and I think that is pretty well done for the websites.